Hi guys, so this videos will be about futures, right? You've been seeing the trend that people are now going from Forex to futures, especially those in the United States that stays in a country whereby the pro firm is unregulated and how forex can easily be manipulated and all that, and we see people are actually moving from forex to futures. So this video is just about to tell you that you can actually use the same strategy you are using for forex, the same strategy for forex on futures as well. So as long as your strategy is based on price action, market structure, key levels slash zones, you can actually use the strategy on any instrument in the market, either forex, it can be forex, right? It can be futures, it can be crypto, it can be stocks, many more etc, right? So as long as your strategy is based on price action, market structure, just like I previously, then you can always use the same strategy on any other instrument of the market. So now this one will be something similar to, I'm just going to show you guys that even you can use the same strategy that I use, which is the Fibonacci strategy, right? Fibonacci strategy with futures as well. We can use it with futures as well. So for those that doesn't know much about futures, right, you can also use futures, like basically you can use the currency pairs you trade on forex. You can also use the same, you can also trade the same thing on features as well, and they are very similar in price as well. So for those that doesn't know much about futures, I'm just going to show you how to use futures on TradingView. So the platform I'm currently using is called TradingView. So I'm going to use so let's just go how it I'm just going to do a basic tutorial on how you can use the strategy I use for forex on features as well. So now what you do is, if you want to go to gold, so if you've been watching my analysis, you know majority of the time I like to trade gold, those are gold and GU, right? So I'm going to show you, if you still want to trade gold but instead of forex you want to do it in futures, what you would do is, right, you will go and search for GC. You search for GC on your trading view, and you can see around this area right here it has the GC. So GC is basically gold related, right? It's gold on feature, so you're going to click on that and you'll be able to get gold, and you'll see some sort of something like this. So it's called GC. There are always different kind of GC1, right? Different types, but I like to choose the one that is GC1 with the exclamation mark. So let's analyze features using Fibonacci trading strategy. So let's do it just to give you example. So this is gold for future. Just like to know, I like to do top down analysis, right? You can also draw your trend line. So before I do the analysis on futures on gold, let me just show you a comparison of how similar gold futures is to forex futures. So basically this is our gold futures chart right here. So let's go to forex future chart and you will see the similarities. You can see how similar that looks. They're like, they are really similar. So there is no difference at all. It's just like the terminology we use in forex and futures are really different. If you guys just want to go deeper to futures, for those that are interested in futures, that want to transit from forex to futures, You can read more on more terminologies based on futures. Here, this video is not for that. The video is actually for just to tell you that your strategy can actually, the strategy I use, which is Fibonacci strategy, or any other strategy that is related to price action, market structure, key zones and levels, can actually work in any instrument. So this is just an example that you can actually use your Forex strategy on futures as well. So just, like, my main strategy is top down analysis. I like to do top down analysis. So I go to my monthly time frame and draw trend line and Fibonacci. That is what I do. I go there, go do top down analysis. So basically this is my monthly time frame. I will draw a trend line right here. So why I like to draw trend line on, if needed, on majority of the time frame, is because it just simplifies the market, which make it easier for to analyze. So now let's go to my weekly time frame. I can also draw a trend line as well. You can draw a trend line from here to here. So just basically very simple strategy, trend line, key zones. You can draw that. We can see that we had this zone right here, which is significant zone, right? We can see that we had, this was our previous eye, right? Previous eye, we've broken that previous eye with this candlestick. Now it's coming down there to retest. So just basic price action analysis can work on any instruments, guys. So now I can also still draw another more trend line right here, from here to here. So we know that as long as we are above this trend line, right, we should we should buy rather than overall sell, right? So that just make it more easier for us to actually do. So we can also draw structure right here, right, just to signify that this is like, just make your trading strategy very simple, just to signifies that if we break out of this zone right here with an engulfing candle, right, and I see a sort of like a confirmation that it's a breakout and not a fake out, then there's a higher chance that I'm going to write it, and my next key zone is around here. So this will be our next key zone, and that is why it's really important. Your strategy should be based on price action. That is really, really crucial. You can see right here, another thing I can see based on just analyzing, right, there's a key zone right here. I can draw a box right here because there is a key zone right here, and that is because we can see that we've rejected around that place 2 times. There's a rejection rate, there's a rejection here. This has become like a kind of like a resistance right here. So for her to actually buy on the markets to be safe, right, it will be better for it to at least come up here and break the zone right here with a momentum of buy. Then that will solidify that we might continue to push to the upside, right? So that's a possibility, because we can see that it's giving me some sort of like an M pattern, right? And we know the M pattern is a reversal pattern, so that means there's a possibility for it to actually push to the downside. But based on the strategy right here, right, for us to actually sell and to have more higher probability of it selling, it would be wise for us to actually be patient for market to break out of this particular zone right here, because it's a significant zone, to break out of that zone before we can safely buy, right, before we can safely sell. And to sell, at least this will be our next target, because we had this break of structure right here with this impulsive movement right here, and some sort of like either correction to this level to push to the upside, or to at least come down a little bit more to retest the zone right here, to retest the zone, right, before pushing to the upside, right? So that will based on the on how we're going to react to the market, right? So now go to my 4-hour time frame and see if there's any need for anything. Yes, based on this price action right here, I can also still draw a valid trend line around this area right here. We can see, right, that is valid. I like to go more smaller to more smaller time frame. So basically this is how I do my top down analysis, right? You can also draw, you can still draw a zone right here. This signifies that we currently break structure around that area right here, right? that's also very, very valid at this moment right here. So we can see, we can also still draw a trend line right here. So for us to actually do this one right here, this is not currently actually valid based on the price action we currently have right now, but based on the fact that pyro price action, right, if you had a trend line right here and we see this breaking this area right here, retesting this area right here, forming the WM pattern right here. Let me zoom out a little bit just like and explain what I mean. You can see it broke this trend line right here, kind of retest the trend line, created this WM pattern, sorry, right here. We definitely can write it down to this zone right here, right? Just like using your Fib, and just to show you that Fibonacci also works around this with this instrument as well. We can see that based on if I want to enter this kind of trade, right, what I will have done, like I explained earlier on, right, to take the sell on this trade, we broke the confluences to take a sell based on that, right, one break of trend line. We broke the trend line, to retested the trend line. We tested the trend line right here, like I said. Now it's giving me the M pattern, and like I said, the M pattern is a reversal pattern on my 61.8% fib level 3, M pattern on 61.8% fib level. That's another confluence, right? Definitely I'm going to take this trade around this area, and it hits my negative 27% fib level, just like I mentioned. And if you've been watching my analysis on my Fibonacci analysis, you know majority of the time my negative 27% fib level are reversals zone slash area, whatever you want to call it. It can be an area or a zone, right? So basically this is my three confluences that will actually make me take the sale, and this is the same way I actually trade on Forex as well. So this is just an example that even Fibonacci strategy can work on any other instrument, and this example right here is just futures, because I realized that some people based in some other countries, like example USA, they're having issues with Forex, right? So people are transiting to futures, and that is why I just want to make this video, just to show that your strategy can work in any strategy, to be honest. Like I said, as long as your strategy follows the main thing, which is price action. Price action is the key. Follows price action, key zones, market structural, chart pattern, candlestick patterns, and all that, then it's very, very similar. And so that would have tricked that kind of trade around that area right here. And let's delete this one. So based on this current market right here, what I will have done, right, we can see based on prior price action, we've rejected here, we rejected here, we came here, we rejected, came down to this zone, rejected, came rejected around 3 times right here, giving us like a triple bottom around this area right here. Push up a little bit, right? You can see we have this push up a little bit, right, giving us fake out. So this was a fake out, and that is why sometimes I just don't like taking my trade out of a breakout, right? It works sometimes, right? But sometimes you just need more confirmation. You can see for someone that would have said, oh, it's broke out, wait, let's go to more smaller time frame and see. Okay, let's see this time frame right now. Someone that will have said, oh, it broke out of this zone right here, right? Will have taken a buy around this area, and this will have just continued to push down. It's the stop loss, as we can see, and now we can see that it's targeting on it. That's why sometimes when it breaks out, especially if it doesn't break out with a good momentum, candlestick momentum, we can see that this candlestick was really, really good until we saw this long weak rejection, right? So that will make us a little bit wary that that might be a solid rejection for it to actually continue to push to the downside, and be patient to get more data, right? So basically, based on normal price action around this level right here, what we will have done is still wait, because I think it's kind of like ranging around the zone, right? We can see it's ranging around this zone right here, so there's a higher chance of it actually pushing to the downside right here. Then we might continue to tank to the upside, or break this zone like I mentioned to push to the downside, right? Remember, we don't predict the market, we react to the market. So basically, let me use my fib around this area right here and still show you that the fib strategy can actually work around any other instrument as well, from point A here to point B, as we can see right here. At least I'm predicting it to at least push down to my negative 27% fib level, right, which is 2156.2. I'm still predicting it to get to this level. How would I have entered this trade right here? We can see we have this breakout zone, right, with this beautiful engulfing candle right here. So this engulfing candle right here simplifies to me and solidifies to me that there's an higher chance of it actually continuing to push to the downside based on that momentum that we are seeing right here. But would I have entered a trade right around this area? Definitely not, because if I enter a trade around this area, my stop loss will be right around here, and that is way too much, right? So I'll be waiting for some sort of like a reversal or a rejection around a Fibonacci level, and we can see right here that I will have taken my trade off of this area right here, 38.2% fib level. And like I said, my confluence would be, because now I've identified that this candlestick has a lot of momentum of sell. So sell candlestick momentum, that is one verification, and I wouldn't have entered that trade right around here. Right now we can see that we are having a retracement around my 38.2% fib level, which is my second confluence. My third confluence is it's created the M pattern, and those pattern are one of the best pattern I like to use, especially in gold and GU, the M and W pattern. And sometimes we have like the triple patterns, right, which are like very, very effective. The majority of the time I love that. We can see right around here we have the M pattern right here. We can see that it forms around this area right here. That's a good place to take the trade, and we're possibly going to ride it to my negative 27% fib level, which you know that that's like my TP1 most of the time. So basically that's how I'll have traded this gold futures as well. So I'm just trying to explain to you guys that um you can actually use Fibonacci trading strategy on features as well, or any other instrument out there. So this is an example of gold, right? Let me just do one more example. Probably let's say so let's just do an example on oil, right? Just for us to see that it works on anything you want to do. So if you want to go for oil on futures, this is oil on futures. Just type in CL, it will give you like the crude oil for futures, and you basically just click on it and you can see the charts for oil. So basically what we're going to do is just similar strategy based on what we are doing on normal top down analysis. Go to a bigger time frame and analyze oil. So this is crude oil for futures right here. I'm just going to do another example. Go to my monthly time frame, draw my trend lines on necessary points or areas. We can see right here. I can also draw another trend line right here. You can see. Go to my weekly time frame. Let's see what we have currently. So on my weekly time frame right here, we can see that this is a zone right here that has rejected multiple times around that zone. So that's a key area for us to note. So certainly I'm going to put a zone right here just for us to see that that's a key area right here. So we can see, I can also draw a trend line right here from here to here. So we can see that drawing a trend line here signifies that there's a possibility that getting here we might start reversing to the downside. We can see we rejected around here one time, two times, the third time, and now we're having a possible fourth time rejection around that area right here. If I also use my Fibonacci level right here, we can see from point A to point B right here. Let's go to smaller time frame. We can see that we are currently rejecting around my negative 27% fib level, which we see that is also a reversal area. So basically right around this area, based on this current price action right here, there is a possibility for it to actually drop to the downside. My reason is because we are currently on a trend line that has rejected multiple times based on the power price action. One confluence, another confluence is we are currently rejected around my 27% fib level, which you know by now if you've been watching my analysis that those are like my reversal zone as well. So those are like confluences I just need right here, but I wouldn't have taken a trade off of that only. I would need a sort of the pattern, which is like some sort of like an M pattern to verify that area for me to make so that we can continue to push to the downside, right? Because just because the market has rejected around that trend line multiple times doesn't mean that it can break out of that zone, right? And that is why we need confirmation most of the time before taking a trade. I can also still post like an uptrend, a line right here just to signify that it's still an uptrend kind. So like I mentioned, right, we can reject around this area multiple times, right? So I can draw my fib from point A here to point B just to show you guys. Go to more smaller time frame, right? Just to show you guys that how will I have and would I have entered a trade around this area for a sell, right? We are currently around, first of all, we are currently around a trend line whereby it has rejected around that trend line 4 times. That is one confluent. My second confluent is we are currently around my negative 27% fib level, which you know that's a reversal zone for me, right? So I wouldn't have just take this trade just like that. I would have waited for one more confirmation, which is like the M pattern, because you can see that the M pattern and the W pattern really works with features. So that would be something I would think you guys to incorporate in your confluences as well, right? I can also draw this trend line right around this area just to signify that at least if we are going to take a sell around this area right here, there should be like a target, overall target right here based on the trend line we're having, which is around my 38.2% fib level, right, for it to start this trend line. Because when we get to this trend line, then we might continue to push to the upside or break this trend line, retest the trend line, and continue to push to the downside based on what the market does around that area right there, right? So for us to take this kind of trade right here, we'll at least wait for a pattern for us to know that we're going to continue to push to the downside, which is like the M pattern, to take the trade, possible ride it to around this area right here. So this is just an example to show you that you can actually use the same strategy on futures as well. So that is just my tutorial on using Fibonacci on futures as well, just for people that are transiting to futures, right? So hope you guys find this video insightful and helpful. If you do, please don't forget to subscribe, comment, like, and share, and I'll see you in my next analysis, guys. Thank you for watching. Bye.